Hello and welcome back to our channel. Today we're going to discuss the current state of the global economy and its potential impact on investors. In particular, we'll be taking a closer look at Warren Buffett's recent warning about an impending crash that could be worse than the 1929 stock market crash. Buffett, who is widely regarded as one of the most successful investors of all time, has been sounding the alarm about the current state of the economy for some time now. In a recent interview, he warned that a major crash was coming and that it could be worse than anything we've seen before. So, what exactly is Buffett warning us about, and what can investors do to protect themselves? Stick around to find out. To understand why Buffett is sounding the alarm, we first need to take a closer look at the current state of the global economy. In recent years, we've seen unprecedented levels of debt, both at the individual and government levels. In addition, we've seen a significant increase in the number of companies taking on debt to finance stock buybacks and other activities that don't necessarily generate long-term value. This has led to a situation where many companies are overvalued and at risk of collapsing under the weight of their own debt. At the same time, we're also seeing a slowdown in global economic growth, with many countries struggling to maintain their current levels of prosperity. This has led to a situation where many investors are pouring money into the stock market in search of higher returns, even as the risks continue to mount. So, what are some of the warning signs that a major crash could be on the horizon? According to Buffett, there are several key indicators that investors should be paying close attention to. First, we have the current levels of debt, which are at an all-time high. This is a major concern, as it means that many individuals and companies are living beyond their means, and that a significant number of people could default on their debt if the economy takes a turn for the worse. Second, we have the fact that many companies are overvalued, which means that they're trading at prices that are higher than their actual worth. This makes them vulnerable to a sudden downturn in the market, as investors will quickly lose confidence in their ability to generate returns. Third, we have the fact that many countries are struggling to maintain their current levels of economic growth. This is a major concern, as it means that there is less money flowing into the economy, which could lead to a slowdown in consumer spending and a decrease in investor confidence. So, what can investors do to protect themselves in the event of a major crash? Buffett has several pieces of advice that are worth considering. First, he recommends that investors focus on companies that have a strong track record of generating value over the long term. This means that investors should be looking for companies that have a solid business model, a strong management team, and a commitment to generating returns for their shareholders. Second, he recommends that investors avoid taking on too much debt. This means that if you're investing in stocks, you should be looking for companies that have a low level of debt and a solid balance sheet. Finally, he recommends that investors be patient and avoid making rash decisions based on short-term market movements. This means that if the market takes a sudden downturn, you should resist the urge to sell your investments and instead focus on the long-term potential of your portfolio. In conclusion, Warren Buffett's warning about an impending crash is something that all investors should be taking seriously. While we can't predict when or how a crash will occur, we can take steps to protect ourselves by investing in solid companies, avoiding excessive debt, and focusing on the long-term potential of our portfolios. If you're investing in the stock market, it's important to remember that there are always risks involved and that you should never invest more than you can afford to lose. By staying informed and making smart investment decisions, you can help ensure that your investments are protected even in the face of a major market downturn. So, what do you think about Warren Buffett's warning? Do you agree that a major crash is coming? Or do you think that the market will continue to grow in the coming years? Let us know in the comments below, and don't forget to subscribe to our channel for more investment news and insights. Thanks for watching, and we'll see you in the next video.